The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. We will have as our guest tomorrow, Tim Bost, Financial Cycles Weekly. Thursday, we're going to have Alfie Lavoie from Air Software. He's the one who develops all this cycle software that Bill Meridian and a whole bunch of other folks use. He'll be talking to us about that. They've got a special sale for Christmas. And then on Friday, I'm trying to get either Stan Harley, Bill Meridian, or Arch Crawford. One of those three is the one I'm going to be trying to get as our guest on Friday. And if not, we'll be here all day Friday no matter what. Now, I posted a chart for the FTSE to start off with. You can see there's a very large ABCD pattern, also known as the Thunderbolt, right out of page 250 out of H.M. Gartley's book. And then the following one is the one for the DAX index, which is the German market. You can see here that we're making a three drive to a top pattern on the hourly chart, also included with the ABCD patterns. Folks, every day I get one email from somebody asking a question or making a comment, but yesterday I got 5, and it was all about the same thing. And does anybody want to guess what that the content of that email was? I'll give you a few seconds to try to see what it was. But does anybody want to guess what that comment was? Well, the time is judge's ruling. The time has run out. It was about the gold market. And two of the people who's been following me for many years, long before I was here at TFNN, which started in 2007, they said that's the first time that they have ever heard me being nervous about a trade when I was in the gold trade. And they're probably right. I'm sure they were right, because I even expressed this on the show yesterday. And the reason for it is the fact, I'll get this chart up and I'll just walk through the thing. And there's a good story behind this, so we'll do that too. But here is the chart that we were looking at right here. You'll see here, we were right down there at 1766. That's when we were on the show yesterday, and I said we have to cover the gold for 3 different reasons. And the first reason was the fact that silver was acting so good. It really was. It had just, made a nice move, and it was up about 45 cents above where the low that it made, and gold was still down on the day. The second reason is that we had that lunar eclipse with the full moon, and that was a very important one. And the third one was the fact that we had such a nice run in the market that the difference between our original target, which still might be reached, but I don't think so now, given the action that we're seeing right now, is we'll be able to see the market. In other words, if I was to try to squeeze another $40 out of the short gold position, okay, and it's down 10 days, only had one up day out of the last 10 days, and that was the reasoning for why I thought we should cover it. Well, as you can see, we've rallied almost $60 an ounce since that time, and the question was, why in the world didn't I just turn around and go long the gold? And the answer to that was I don't know. I probably should have. And if you looked at the silver, I really like the silver. I mean, I know some people did. And Mr. Z was in the room yesterday with his trombone and drums, beating "This Is It" in the gold market right at the bottom, 1766. So there's a whole lot of reasons there. But if you look at this 4-hour chart on the silver, you'll notice it didn't even take out the lows of September. And when you stop and think that gold's $100 lower than the November low, boy, that's a pretty strong market if it can do that. And if you looked at it closely over the last 10 days, you can actually see a 3 drive to a bottom pattern that's absolutely perfect. So that was the main reason that I was covering the gold was because of that 3 drive to a bottom pattern and the action in the silver. So that's what I did. So I'm not going to, try to second guess myself. That's just the way that it is. But believe me, folks, we've got a major bottom here in the gold market. This is a major ABCD correction. It's not going to make that pattern that I thought it was going to make, which is 1727. It's going to miss that by about $38. So I think that what you want to do is watch for a nice little retracement here in the gold, and we'll see if it's going to make it. We'll see what's going on here. Okay, all right. Let's now. Yes, Mr. Z, he nailed that. And the other one, let's just since we're let me get to platinum first, and I want to talk just a little about Mr. Z, about what he does for you guys in here, because that guy really knows a lot of stuff. We want to look at the platinum. Here's another situation that was interesting. Look at what was happening. You've got gold down $40 yesterday, and platinum is up on the day. And look what it did. It went up another $40 to hit almost par. It hit to 993, okay? And that's a big, and I think it's going to go a lot higher than that, because if you look at the low back in September, that was a 38% retracement right off of a big Gartley pattern, very, very bullish. You tested it again in November, very, very bullish. This looks like it really wants to go. So I really think this gold is getting ready to move. I'll be watching for a nice little ABCD intraday on a 30-minute, of course, to try to get in on it. But I have to give you the story behind this, but I don't have time to do that right now. I'll have to do the story at the break, and I've got it written down here to remind us someone very famous. Here, I'll start the story now. How about that? Many, many years ago, 20 years ago, more than 20 years ago, when Mark was writing the book, Trading in the Zone, he would have people come here from all over all over the world, to be interviewed. And we would come here to the office, and they would spend a day or two visiting with us and everything. And these guys were professional traders. I mean, every single one of them. And some of them were really, really famous. And one of the very most famous, and I'm sworn to secrecy here, because when he was here, the only thing he required is that he would never be, told that he was interviewed or anything like that. He didn't want to know who it was. So I'm not going to tell you his name. And I promised Paul later. Oh, what did I do? No, I'm just teasing you, folks. It wasn't Paul Tudor Jones. It was somebody actually more famous than Paul Tudor Jones. Anyway, he was here. He had a briefcase. In his briefcase, he had 3 different telephones, these cell phones. These are large ones. This is going back to 1997, I think it was. Yeah, 1997. And we were chatting about the markets, and he was saying, and he was being interviewed. Mark was there. It was a whole day interview, and it was fun. We were just chatting, and we go to lunch and dinner and stuff. But anyway, he would talk to us about his trading, and I'm going to share with you because one of the things in Mark books that he talked about was the thing that professional traders, the 4 things that they, the 4 fears that we have: missing out, leaving money on the table, all that stuff. The number one thing for people that are really, really good at this business is leaving money on the table, believe it or not. So we'll get right back to that, and I'll tell you why. 877-927-6648.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks. I was commenting about the gentleman who was here visiting Mark during that time, and we actually became friends, and he's a very nice fellow, extremely wealthy, multi-billionaire. And he would tell us, when he was listening to the conversations with Mark, he would say the things that really bothers him the most. He said, taking losses. He said, that's nothing. He said, I do that all day long. He said, the ones that really hurt, he says, is when I've got him in a big move and I get out too early and I leave money on the table. And Mark said to him, he says, the only way you're not going to be able to beat that is you're going to have to get the exact high tick or the exact low tick. And he thought about it a little bit, and he said, well, I never really thought of it that way. He said, but I guess you're right. But he said, I shake it off pretty good. But he said, it does bother me, because you stop and look, say, gee, I got out of that, and look, I would have made another X number of dollars. So that's neither here nor there. Now, I wanted to reiterate a couple things. Remember, we were talking about Mr. Z, all the things that he does here in the market, in the Tiger Den here for you folks. But remember yesterday, Mr. Z was talking about, he was posting in there possibility of a sell-off in soybeans. And you'll notice here that the soybeans were setting right over those last 4 or 5 trading days, not able to get above $12 a bushel. And guess what? Rain came into Brazil and the stuff dropped 40 cents, just faster than heck. Now, whether that's a buying opportunity, I don't know. But for short-term trading, Mr. Z absolutely had that, pressed right onto the market. If you were looking, and many of our folks here, we watch the corn market very, very closely because it's a big, big market, the largest of all the crops in the United States. And you can see on this 15-minute chart, looking at the March corn, you'll see that we made an absolute perfect ABCD pattern. It was just exact 1.27 coming off of the 382 correction that we had back on November 24th. And then we went up and made the butterfly pattern, and then boom, we had a pretty big break. We did not take out the lows of the 24th, so the market is still relatively bullish. But the real key to me will be what happens over the next day or two, because if the market does not rally here in corn today or tomorrow, that's telling us that this rally is pretty much over, and you're getting ready to have a pretty substantial move to the downside. And if you look at the commitment of traders, what's going on? I mean, these funds for commodities are very heavily involved in the long side of corn, oil, soybean oil, and the soybean meal, and also soybeans. Not so much wheat. Wheat has gotten hit worse because we posted that yesterday. They got all the way down to 585 after hitting the Gartley pattern up there at 622 just a few days ago. So those are just a few of the things that are going on here in the Tiger Den, and Mr. Z, and along with the other folks that are in there. But Mr. Z is by far, and I say this with the greatest deal of respect, he's by far one of the most experienced traders that I've ever run into, and he certainly knows the business, and he's kind enough to share, what he's doing. And I think those are the things that some of you folks that are just getting started, need to be watching closely. Now, I wanted to share another chart here, which is the copper, because copper, here's another one that Mr. Z he sent a special out over the weekend saying that this copper was getting ready to explode. And as you can see, what's happened over the last several days, starting with Friday and then Monday and again Tuesday, I mean, it's just making new highs. And if you'll notice, it looks like there's a big magnet up there at the 362. That's about 12 cents from where we are right now, which is the 1.618 on this long-term daily chart. So that's a major one to look at. If you go back and look at the left side of the chart in January, there's a very nice pattern in there. You'll notice that we had that little tiny 382 retracement there that took about 2 weeks to complete. I mean, the market basically, had just what we call even a dead cat bounce. And then you see what that happens. That's why when you see those strong trending markets, it's really important. But on this one, on the upside, there's not a 382 retracement to be had on this thing. I mean, it has a couple of 10-cent corrections, but they're not any percentages at all. This has just been a straight up move in copper, and it does look like they were headed to 360 a pound in the copper. That's the only number I can see up there that's even close to being correct. So those are just a couple of things that we're keeping our close eye on here this morning. Then I had one other question someone was asking, and that was about the, hold on one second, I'll get it up here. It was the U.S. dollar index. Get it up here, right here. Oh, there's another question on the gold. I'll bring that up in a minute. But here's the U.S. dollar index. We'll get this ready. This is very, very close to, getting below the 91.20. If we get below 91.20, folks, there's something seriously wrong with the dollar, and that means it's going to weaken up substantially, which means the euro would probably be stronger. I don't think so much in the pound because it's acting very weak, but the Australian dollar, Canadian dollar, Japanese yen, all of those could push the dollar, far, far lower, especially the Japanese yen. So those are just some of the ones that we're watching. But the euro, longer term is setting up there. We've talked about that double top up there at that 120 level so many times, and, whether it's going to pop through or not, I don't know. I have just checked it just about 30 minutes before the show started. Let me get up here and take a quick look at it. We're trading at 1990 now in the March futures. That puts the spot probably about 1980, so it's about 40 points away from what we call a big breakout. The crude oil is still in a potential sell zone. We posted that in the newsletter over the weekend. A very, very important number in that, and I'll get this up so you can take a quick look at it just to remind ourselves, what we're watching here. And you'll be able to see it, quite easily because none of these numbers have been violated. It hasn't gone anywhere, but we still haven't taken out the highs at 46.30 yet. And if we do that, then of course, we might go a little bit higher. But right now we've had those multiple ABCD patterns coming in at a 1.27 expansion. So I would assume that that's going to be a pretty good one, to hold the market back for just a little bit. When we come to the break here, I want to cover some of the commodity markets that we watch sometimes because, boy, some of these moves that we've had there have been really, really fantastic. I know some of the folks in the den here have been very instrumental in getting long sugar for one thing, coffee for another. These are things that I don't usually trade, but I do chart them, and they've been having some tremendous moves, and that's a good thing. So we'll keep a close eye on it. We've got some great volatility coming up, folks, for 2021. This is going to be you think last year was going to be volatile? This year is going to be even more volatile, and those are the things that we like to see, because these volatility is where you can whittle down to a really good low entry point on something, and we'll be able to see it. Yes, Bob, I'm watching natural gas very, very closely, because it's at a lot of resistance at $3 and a lot of support at $2.85. But I'm watching natural gas quite a bit, because it's a fun thing to trade. It's like the pork bellies of the energy complex, because it moves $600-700 in a heartbeat. And it's a fun one to trade. Good fills and great margin as far as the leverage on the margin involved. 877-927-6648. We'll be right back, folks.
Larry Pesavento watches the markets 24/7, and now is a great time to try out his daily trading service, Fibonacci 24/7. Larry publishes videos and charts for subscribers throughout the week when warranted, and every weekend he puts out a thorough report covering worldwide markets, futures, commodities, and currencies with Fibonacci retracement levels, possible trading setups and zones, and stops and targets for all recommendations included. Larry applies the principles he's developed over decades of trading while analyzing a variety of markets for subscribers. To see for yourself the types of videos, charts, and analysis that Larry provides for his subscribers, sign up for Fibonacci 24/7 today by visiting the front page of TFNN.com under the newsletter tab. You'll also gain instant access to Larry's archived subscriber webinar from earlier this year. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, Butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I want to do a quick review here of the gold. Now, this is the February contract. We've switched from December over to February yesterday. We were in the December. We covered that down there at that 1762 level, And you'll notice that I marked the 382 retracement there from Sunday night, and then we went sideways, and then I put the new 382 in on Monday morning. And look what happened once we went above that. That was at 1788. The market just exploded. But you'll notice that the 61% retracement there at 1801. What happened there? The market just exploded by $10 an ounce. And I sent out I saw this happening. And believe this or not, this is what happened. This was not a trade. I was just sending this out to folks, showing you what gold was doing, because we're waiting to try to find a place to buy it. And you'll notice right there at that 1801.5, I said the 61% retracement came in. It was not an order to sell. It was a Gartley. I did not say to sell it. I just said that it's for your information. And my goodness, I had no longer clicked that button. Then it was trading at 1798 when I hit it, and by the time this went out, it was trading at it was 1811. It moved a little over $1,000 in about less than 5 minutes. I mean, it was really an explosive move. That told me that trend in gold has changed. So it certainly has. Now what we have to do is to be patient and try to find a nice low-risk entry. And believe me, folks, it will give us a low-risk entry, because there were enough folks out there in the market that got hurt on the long side that will be looking to buy it back. But we'll be able to get to that point without too much trouble. Let me see. I think I already covered the dollar index. I wanted to make sure I did that. Now, one thing I want to do now is cover a few of these commodities that we've been watching here for quite some time, because they've had some, tremendous moves in here, and I want to be able to get it. Regarding the S&P, folks, there's a lot of resistance at 3665 today. I believe that was pretty close to the overnight high, but it's not really. It's not that much. It's not as important as, because you don't have to pick a top up in here, folks. If you try to do that, you're going to go nuts, because the Fed's in there all the time, and you just don't know which one is, when it's going to happen. Find a simple little pattern, and, you'll be able to do just fine with it. That's the main thing that you want to keep in mind. So that's the main thing. Now, remember, I was talking just a little while ago about the wheat market. And you'll be able to see here in just a second here. I'll get this out of the way so we'll be able to watch it, because the wheat has been in a relatively bear market here. We tried selling it a couple times, worked out pretty good. But you'll notice here we've had the three lower tops. You can see that from late October into late November. Now, the last one was a beautiful 61% retracement. That's the one we were talking about at 615. And now we're sitting here this morning at major support here at the 61% retracement, right around 575. And if we don't hold that 575 level, folks, we're going to be looking at a market that's going to probably go a lot lower. And these are going to set up some great buying opportunities. That's that's the other thing that you want to remind yourself, that these markets go up and they go down. But look at the pattern here that you'll be watching for a buy pattern in wheat. This is very similar to the buy pattern that we're looking at in the gold market. You're looking at a major ABCD pattern of huge dimensions here, because you have three lower tops. That's your 135 pattern. Now you've got the Gartley set up down there at 557. So you want to watch 557 really, really closely, because that's going to be multiple numbers coming in, and we're only 23 cents away from that. So that's just a couple hours of trading, or even less. So I'm going to put this limit minder in for us to let us know that when we get there, we really need to, pay very, very close attention to it. That's, I think, another one that is important. Now, one of the big ones here that we owe Mr. Z to, and Bob and Ruby and a few others, was this coffee trade that has been going on, because it has been an absolute monster here. We'll get it up to let you take a look at it. I haven't traded coffee since Truman was president. You'll see here that we're up against a 61% retracement of the whole move down here now at the 123 level. My guess is we'll probably have a little bit of a sell-off in here, maybe more, but we should get a little bit of a sell-off here to support down around the 115 level in coffee, where I think it would probably be a spot where you want to take a look at it, because that's where we had the big move down. in October started at the 115. So coffee looks like it's got a chance here to, of course, if it gets any higher, you're looking at the 1.27 expansion, and the 78% retracement comes in at 128. That's $6, from where we are right now. So you got $6 on the upside with $6 on the downside. So one of those is going to be hit. But right now you're in the midst of this. You either have to buy that breakout or wait until it completes. And I am of the voting age of saying I would wait till it completes, because there is where you have your lowest amount of risk. I mean, there's a lot of people that say that's not the right way to do it, but that's neither here nor there. But we see that as we go through this all the time. Now we're going to take a look here at December cattle one more time here, because we've had a heck of a move here. Our good friend Jeff was in this. He was in the February. Of course, he bought it down there at that 102 level. And let's get this chart up first, Larry. Let's make sure we don't want to miss that. And there we go. Yeah, there's the big drought is in Brazil. We've talked about that many times with Rich Anderson, but they're starting to get rain now, folks. That's what caused the 40-cent break in beans. But believe me, if that rain only lasts a day or two, beans will be right back up there again. So you've got to be careful in these weather markets, because they move very, very quickly, but they follow the patterns nicely, so you know where to put your stops in and things. But getting back to the cattle, you'll see we had the beautiful pattern come in right at the 50% retracement. The market came down about 3 weeks, made a beautiful pattern on the downside, had a heck of a move up. That was a really nice move. And then after that time, in the last few days, you see we pulled down and almost made a perfect 61% retracement at 107, and then back up again. So these numbers are good because, tell you where to put the stops and tells you when you're right or wrong. That's really what you're looking at when you're watching these things. Now, let's get to the natural gas, because I really think the natural gas has got some chance for some move in here, folks. And I love watching this one because it moves around so very, very much. Let me get it updated here. For some reason, it didn't update today, and I just don't know why. There we go. I think that'll do it. Nope. Son of a gun, I got a problem with. Oh, you know what? It's rolled over to the. Shut the front door and raise the rent. There we go. Let me get up to the other natural gas here, and we'll be able to look at it. It's rolled over to the January. Just a second here. These are my charts from. Yeah, here we are. Here's where we are right now. Just give me that. Get up here so we can take a quick look at it. By the way, if you want to call in, Al said well, you could try 877-927-6648. The lines are jammed right now, but you just never know when they're going to lighten up. So keep trying to get those cards and letters in, and we'll see what we're doing. We've had a nice move off the Gartley. We'll be right back, and we'll talk more about natural gas.
Hi folks, this is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Direxion's daily S&P 500 bull and bear leveraged ETFs. Direxion leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direxion shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit DirexionInvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, folks, I posted the chart of that natural gas with what I expect is happening. It's my anticipation, and remember, that's a little different than hope. Anyway, let's take a look at it. You'll see if we can get a pullback here down to about the 278 to 280 level. That would be a really nice, what we call low-risk buying opportunity, because you'd be right at a 382 retracement, and from that level, you should get a very, very nice move, and you wouldn't have to risk more than about $300. So that's the key to what we're watching here in the natural gas. Now, I've also wanted to bring to your attention another thing that we've been watching quite a bit for our good friend Ruby in the room, and that has been the hog market. And this hog market has just been absolutely a beautiful technical picture. You'll notice last week we had the low down there at $64 a pound, a perfect 78% retracement. It hit it 3 times. And that was telling you what really had great support there. And now we've rallied about 4 cents above that. And you certainly, if you're in the hogs, you don't want your price to go down to anywhere near 64. So I would put my stop at around 64.50 in that and just let it rip to see if it's going to go up and make a 3 drive to a top pattern somewhere above $73 a pound. And believe me, we're going to see inflation in a lot of things, folks, because the supply chain is not going to be keeping up, given the fact that they're shutting so many things down. This is the time where you want to pay close attention to your supplies at home. Make sure you have enough of the things at the circular stock certificates and stuff, because these things could get a little dicey here if they're going to shut the whole world down. And I don't know if they're going to do that or not, but we'll have to wait and see. Got a lot of sick people in the world. Fortunately, the death rate isn't increasing quite a bit, so that's another good reason. And maybe in the next 10 to 15 years, we'll have this vaccine and virus out of the way, and then they'll give us something new to worry about. And who knows what that'll be. It'll probably be another type of disease or something like that. But I will be the very last person to take the vaccine in the United States, folks. I put my name in the list to make sure I'm last. I want everybody to get it ahead of me because I don't want them to get sick. Anyway, let's move on to one other one that's very important to us. And if you've ever had a credit card, if you've ever had a home mortgage, or if you've ever had a car loan, this is the one you got to pay close attention to, folks, because this is the Treasury note market. This is where they do all of this stuff here. And as you can see here, we are in a downtrend. We have been in a downtrend since July. We had the first 382 retracement there. We had the rally. And then the big failures. Look at the lower tops that we're having ever since September. We're down quite a bit today. It's breaking. It's in a very tight channel, as you can see there. That's that 135 pattern that we look at quite a bit. Maybe it stops right here. This is major support where we are right now, folks, at 137.22. And if we hold that, then it's got a chance, to go up and possibly break that. But we've been in a really strong downtrend since July. The market's not oversold, though, because we had a rally from the 9th of November up until the 23rd of November. So we've only had four down days, and it's started down, pretty dramatically. This tells us that interest rates are going higher and not lower. So that's it doesn't look like there's going to be negative interest rates. To me, that's the silliest thing I've ever heard in my 60 years of doing this stuff, but we'll be able to see, how this works out. Yeah, the interest rates are still near zero, but we'll have to wait and see. Folks, it's probably not going to happen in my lifetime, but sometime in the future here, you young people, remember this. This thing about debt. When you have this much debt, you're no longer, you're a partnership with the person that, lend you the money, because there's no way that you can pay it back. The government's not going to be able to pay these things back. They're either going to have to defund it or, in other words, not defund it, but they're going to have to hyperinflate it or change the rules or just renege on the debt. But they're not going to be able to repay it. There's just too much. You're talking trillions of dollars. You know what I mean? It's really, really something. So pay very, very, very close attention to that. Now they're chattering here in the room. I think the market's probably still rallying. Let's see where we are now in the S&P. We're right up near this. Watch this area of 3665, folks. It's a very, very important level. Let me see if I can show you why I think it is. And of course, if you pay more than 2 cents, you have overpaid. But give me 1 second to get it up here, and we'll try to get it up here so we can see it. Oh, well, by golly, there it is. You'll be able to see it here in just a second here. 1 second, and I will show it to you, and I will let you figure out why it's important. I'm not going to tell you everything, because if I told you everything, you'd know everything, and only God knows everything, and she's not telling. Hold on. Let's get this chart up here for the E-mini stop and P. We are trading at 36.59. There is resistance at 36.66. The high overnight has been 36.65. So watch that number. We could take that out by just a little bit, but I do not believe we're going to get any higher. And I'll tell you what the number is in just 30 seconds or less. And here it comes. I don't think we're going to be any higher than 36.68 would be the high today at the most. Now, if it gets above that, it is really off to the races, and it can go anywhere. But there is a huge amount of resistance up here between 36.65. We were as low as 36.50 just a few minutes ago. And you can see what's happened here. We've rallied from 36.50. Well, that's only 10 handles. That's really nothing. And that's in the early morning, what they call amateur hour. So watch the action here, because it's going to be really, let's just do something quickly just to double check something. Yeah, there we go. Yeah, there's where we are. Aha, very good, very good. Hold on just a second here. Okay, that's what we're watching in the stop and P at 36, the key level, 36.65, 36.66. If we get there, I don't think it'll be much more than hitting a few stops and then rolling over. But if we could get to that level and just explode to 36.72 or something like that, and then off to the races. There's not a really good topping action in any of these things, folks. They just look very bullish, and so there's no reason, you can pick a short-term top, because what are we talking about here? We're looking at a 15-minute chart over the past 3 or 4 days. That gives you some idea of where the market is, but when you're looking at a longer time frame, there doesn't look anything that's bearish on these things. I mean, you got new highs in the transportations. You got more people coming in because of the Robin Hood people. I mean, so you've got to be very, very careful, and don't try to be a hero. You don't have to be. Look at yesterday. We had a beautiful move. We went all the way down to 36.06. It was a perfect ABCD there. And where are we now? We're 60 handles higher. And that was the low yesterday was right pretty much spot on where that ABCD pattern came from. So right now, this is what we're looking at. We're watching these numbers closely, so we'll pay close attention. But one thing you might want to keep in mind today is to watch the time frame of 11:30. That's going to be a real interesting one to look at, and I will tell you why. It's just nothing more than a simple cycle program that we use, and you'll be able to see what we're watching here. But I'll bring it up so you can take a quick look at it. This is the AI program that I look at. But at 11:20, 11:30. Actually, 11:30 is a time that if it's hitting that 36.65, 36 area, 66, that's where it would have some problems. But the key level today is at 11:30, and we'll find out whether that could be reverse and could be a low at that time because these markets are so volatile. But right now, high probability says for the next 2 hours, we're going to be ratcheting higher, and we'll find out if that's working. And if it reverses, watch the bottom at 11:30.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step-by-step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and what we're going to be doing is watching this 11:30 time frame, very, very closely. And there's another reason for that is if you take a look at what the forecast is for the bond market, something big is most probably going to happen around 11:30. And you'll notice here that this should start to maybe relieve a little bit of the pressure on the Treasury notes and Treasury bonds around 11:30. Remember, these are all probability-based. They're not perfection-based. The average win is around, or the average percentage is around 75% of the time. It's right. We've been as high as we hit that 36.64 again, 75. But we need the time frame to come in right at around 11:30 to see if this is going to happen, because we could explode out of here very, very closely because we've been there for 3 days. And if we pop above that and there's no selling pressure, this thing could go a great deal higher. The other one is to watch this dollar index, folks. It's starting to shake the tree and get a little bit lower and lower. So we could be looking at a really big collapse in the U.S. dollar. I don't think that's going to happen because of the fact that it's at such a big level here at the 91. If we get below 91.20, then you just literally say, uh-oh, there's really big problems. That means the euro is going to go blasting above 121, which would be, potential breakout. But the way I watch this, looking at this dollar index chart, it's got everything set up to make it a quick reversal. But if reversal doesn't happen, you can't stand in front of it. So that's the key thing to watch. The key level in that euro is at the 120.50 level. That would take out the highs of the previous. It's got to go sharply higher once it breaks that out. Otherwise, it would be the false breakout. That's why that 9100 level in that U.S. dollar index that we posted in the newsletter this weekend, why it's so very, very important, because that tells you that all support is gone. And that's a weekly breakout, folks. I mean, that's a really nasty one. That would be equivalent to gold breaking like it did. So very, very important to watch that U.S. dollar here. Same thing in the Treasury notes and Treasury bonds. There's another one that, if the dollar breaks, that means that maybe the dollar, the rates are going to go much higher. We'll see. So we'll catch you on the flip side tomorrow. Tim Bost is our guest, 877-927-6648.